I'm Peter Resnick from ShadowTrader.net, and this is the Weekend Edition. If you recall from last week's program, I ended on a bullish note, and I was telling you that I felt there was pretty good odds that the market was going to move up this week, and up it did, although it didn't last very long. If you recall, I was bullish going out of the market on Friday, and the futures gapped up on Sunday evening about 30 handles, and they built on from there. The only problem is by about midday Tuesday, it all started to fall apart. So it was really kind of like a day and a half or so of bullishness. Then we kind of moved into a more neutral type of market. And then Friday, obviously, we got very, very strong selling. So we're going to go over a lot of TA in this program. But more importantly, I want to get into some market internals as well, talking about the context of Friday's move and why I think it was a bit more bearish than even the charts would suggest. All right. Beyond that, we're going to do a sector spotlight segment in this show, and I'm going to show you the one sector out of the 11 that I think holds the key to this market moving lower next week. And then beyond that, I'm also going to show you two specific charts to watch that I think you'll be very interested in. Two things that I think are going to be important to watch for next week in terms of what the bias is and could be in play as well. All right, all that and more coming up in today's Weekend Edition. All right, let's kick things off as we always do with our weekend review. As always, gentle reminder for the viewer, you want to be looking for outliers, meaning sectors that are moving opposite the market, which confirms that there is still some rotation happening. You want to also be looking at how many sectors are down this week and how much for confirmation of the move, although it was really just a one-day move on Friday, but obviously that Friday is a big part of the week. So it's the stuff that you want to be looking for. So that being said, majors, I would say definitely confirming to the downside in terms of the amount being down. I mean, look at this 2.5. NDX really got killed here, almost 4%. That was kind of a theme this week where there was some relative weakness there. And the Russell was down about 2.5. And as far as the 11 sectors of the S&P are concerned, notice how the XLK always tracks very closely in terms of, with the majors, how much it's down, et cetera. So I'm not surprised there. Tech really got hit the hardest out of all 11. And generally the S&P tends to follow it. I mean, we're looking at 30.70%. I was just looking at my minder over there on the market internal screen. Almost 31% of the market is the XLK, is the technology. Financials were not that bad. Everything else just kind of a smattering of like 1.5% to 2.5% industrials. Communications took quite a hit. But here's what's interesting. Once again, sector rotation, XLP makes sense. If the market is starting to fear potential recession, for a myriad number of reasons, could be tariffs, whatever, blah, blah, blah. But notice that the money's going into staples, right? The stuff that people are going to need no matter what, even if they're not spending on other things such as discretionary, right? And you can see, obviously, like when you look at discretionary, big difference, right? One's down 1.4%, one's up 1.8%. So that's that. Energy was a little bit flat. Utilities were a little bit flat. I saw a little bit of haven trade on Friday going into stuff like energy and utilities. You can see it there, obviously. Materials were down a bit, and real estate has been holding up pretty well, has been kind of flat here as well. Bonds were only down a little bit, and this is really noteworthy because I'm starting to think that maybe there's a haven trade here going, maybe not. I've been saying prior to today, this really all just kind of changed tone today, and we're going to get into it a little bit later. I'll give you an advance heads up. This is going to be one of the quote unquote charts to watch next week. Is the bonds really had a big rebound today, kind of going opposite what the market was doing, and we don't see that often. Yields collapse a bit. Volatility obviously was strong. That makes sense, obviously, given what happened on Friday. So over the course of the week, it was up 12.5%, but most of that happened just at the end of the week, since it obviously pulled in a little bit. Gold continues to be a superstar. I continue to rinse, repeat that trade in my personal accounts over and over. It's just sell puts on futures trade. Sometimes I buy the futures long and I'll run it, 20, 30 points or whatever. And then I'm also doing covered calls there, which is noteworthy because I am a big believer that covered calls are not a good strategy. So don't get it twisted. I don't like covered calls on equities as a strategy, like for people who only do covered calls. I actually think it's one of the hardest strategies to pull off, and it's not a very easy strategy. I do it only in these gold futures and only at certain times when I line up the technicals in the gold chart, when I'm pretty sort of, I wouldn't say positive, but when the chart is telling me that there's a strong inclination that I'm going to probably go sideways to up. Obviously, whenever I have a deeper pullback in gold, then I would not do the covered call play, right? I then increase my activities of selling puts more of them. And then I also go long the futures without selling those corresponding calls because I know that gold can actually run. So gold continues to look good, and I still maintain I think it's a buy on all pullbacks here. Oil was up a bit, about 1%, and Bitcoin we are also going to talk about towards the end of the program as well because it was down 3% this week, breaking some serious chart patterns. I know a lot of you out there are very interested in crypto, and to me it is falling apart, and we're going to take a brief look at that as well in the show and talk about where that is now and where it may be going in the future. All right, what's really going on? This is, of course, the TA technical analysis portion of the program where we break down what's going on in the majors from a technical perspective to see what happened this past week, but more importantly, to try to give us a handle on what is going to happen in the week ahead. Before I get into the charts, I just wanted to go into this page right here just for 1 second. I've been working on this for a while and it's taken me some time to complete, but I finally completed it and I wanted to share it with you here on the video. This is the recommended reading list at ShadowTrader.net. It's really easy to find because it is ShadowTrader.net/books. You can see the uh, address there in the Chiron. And what's kind of cool about this page is that it is every single trading book that I personally have read, which is really not that many. I actually know a lot of traders who have read like 10 times this many trading books. But these are all the ones that I've actually read. And and also I've read a few more than this, but these are the ones that I've actually really, really loved and feel that they actually have some merit for traders of all stripes, basically. And so you can check it out here. Again, it's shadowshare.net/books. And I had a little bit of fun with this in that I wrote all of these little descriptions here myself, talking about, couple little personal things in there and a little bit of humor spliced in, and just kind of giving my personal take on what these books are and why I like them. So if that's of any use to you, you want to check it out, and you may want to check out some of these books. Obviously, there's some buy now links here. You can click on the book as well to take you there. And again, that is shadowtrader.net/books. All right, let's get into the charts here. Let's switch over to the S&P daily, and we are going to start on. We're going to start by just looking at where we were last week in terms of the breakout and what the balance area was and what kind of sent the market higher, as I was saying. So if you recall, my take last week was because we were like this and the bottom was double here and failed to go lower and close strong, my thought process was, as I said, that we would go higher. And I was long coming out of that. That worked out really well. Futures and a number of positions with my weekly room in weekly options for the March 28th expiry. And we had to be really nimble. We actually closed all of our trades as winners. But as I was saying in the introduction, it lasted literally a day and a half, and that was right here. And literally nothing happened after that. Then we fell right back down. And that was kind of the first signal, to be honest with you, that things were just not right in the market, in that the 2-day advance here was all taken back by 1 day right here. It was the Wednesday that took it all back. And then Thursday, I think there was balance here just because we were at the trend line. But whenever you're at a trend line support here, as we were like so, you have to figure you can't just assume what's going to happen. Is it going to fall down, or, are you going to essentially what I'm saying is when you're at trendline support like that, you have to still assume that the market could still go up. That's what I'm trying to say. So sorry for the little being tongue tied there for a second. But as of Thursday's close, my take on it was that there was no way to really be short the market because not only are you right at trendline support and you did get bounced there, right? So you didn't really know that this Friday was going to happen. But you closed pretty decent, right? And you didn't go deep into the balance area here, right? Like this was your balance area here, and you didn't really go very, very deep into it. So that's what I'm thinking. But then again, as I was saying, Friday changed the tone completely with this bearish action. So what's the real takeaway from Friday's action and what's important as far as the charts? Well, the first thing is, of course, that the last week's balance area has been obliterated. Now, this balance area, once you move out of it, doesn't mean so much. It only has merit as you move back into it because this is how you kind of knew that Friday was going to be pretty bearish once it started, because this whole thing here was a look above and fail, right? This is a look above and fail right here, where you have 2 days out of balance and you come right into balance. And as we know, the balance rules tell us what? That if that happens, the trade is then for rotation to the opposing end of balance, right? And you can see the opposing end of balance is here. And it happened very quickly. It doesn't have to happen in one day, but the fact that it did happen in one day on Friday is yet another feather in the cap for the Bears this week, because it happened very, very quickly, that rotation. So now let's look forward. Where is this going to take us? Well, I think that since we've taken out these two lows, which were very equal, the odds favor now that we would go to here. And we've also got a short-term trend line support there, which is important. So I'm thinking around the 5,500 level is where this market should see. If we switch over to a weekly and pull it out a little bit, you'll see where my trend line comes from. It's a relatively short-term one. It's only from April of last year. I mean, decent, almost a year at this point, but it is important. That's where I think we go. Notice that the last move here to the downside stopped just a little bit ahead of it. So I think that the next move is going to be here, and then we have to reassess the situation. Although if we do go there, and the faster we go there, the more bearish it is, then I would be thinking it's probably lower from there, because you would be violating on the weekly chart this shadow to the downside, right? We call that shadow violation to the downside when you have a move like this that has, see how there's the bottoming tail here? There's this reversal bar here to the upside on the weekly. And if you take out that shadow on the downside, we call that violating the shadow to the downside, and it tends to be bearish. So that is also something to keep very much in mind. Now, looking further ahead, if we stay on this S&P chart, and mind you, what I'm about to say is way, way further ahead. But if the market is going to get very bearish here, it does make sense to start looking at this stuff to get an idea of just how far this could slide. So in doing that, you just have to switch from weekly down to monthly, right? And take a look at where is your dominant trend, which is obviously here, going all the way back to here, and that's putting the market down at around 4,800. Now, that being said, you would probably need a couple of months to do that. We'd probably be in an all-out bear market, a lot more bearish than just this 1 month down. We'll see how March closes. Obviously, we still have 1 day to go. Looks to me like it's going to close bearish. But if you look at the size of these bars, and especially going down, it's not that much of a stretch to say that this market could actually move much lower, right? We haven't tested the 21 yet here. We haven't been there in a while. So that's noteworthy as well. The fact that going all the way back here to like late 2023 was the last time we were interacting with the 21 EMA on the monthly. So potentially that could be in play. Like, even if we're not thinking all the way down here under the 5,000 in terms of the bearishness, what about testing the 21 EMA, 53.23? I mean, that's quite a ways lower. You're talking about 250 S&P points lower just to be testing that level. And I think that could happen on the monthly charts in early April, given that we haven't seen that 21 in some time. All right, let's take a brief look at the NDX. Kind of a similar thing going on, except that the main difference here, takeaway in the NDX, is you're still a little bit further away from what I'm calling the March 13 low right in here, right? I'll just mark it off. It's this low right here. That's the March 13 low, which is the swing low. And you can see that comes in down at 19,152. Obviously, where I clicked it here, it's not exact. So 19,150, and we're closed today on the NDX at 19,280. So you got about another 130 points to the downside on the NDX before you see that. Could happen. And then the same April 2024 trend line in the NDX is here, here, and here, and you're looking at 18.5 basically, and that's where we could go. Could easily see 18.5 to the downside from here if we breach this level. So things are looking a little bit bearish, I got to say. I mean, this has been a market that's very, very rotation-ish. We'll see if that continues. But as I get a little bit deeper into the show, in the next segment, I'll talk about under the hood, you're going to see that it was a little bit more confirming today in terms of not only sectors participating to the downside, but also market internals as well. So market internals, getting under the hood, as I call it, talking about all the important stuff about the 11 sectors, breadth, all that stuff, iceberg tick. I'm going to show you in a second. This is kind of where the rubber meets the road for me. For me, everything has to be confirming when I'm looking for entries for my longer term stuff, some day trading here and there, whatever. If you're doing DTE0, of course, this stuff is super, super powerful, right? If you're doing anything with DTE0, you absolutely must know context. And I know a lot of you are doing DTE0 because DTE0 is very popular right now. But let's take a look at what was going on today. So the numbers that you see on the screen here is all just reflecting today, which is Friday the 28th. First number to note is the one in the upper left, which is right here at the beginning, 6 to 1. That's the breadth. That means negative breadth. So basically all this is the relationship between the amount of volume that was flowing into up stocks, meaning a stock that was higher than the prior day's close, versus the amount of volume that was flowing into down stocks, which were below the prior day's close. And the ratio today was 6 to 1 at the close. It was in the sevens actually at some point in the afternoon. So that's pretty bearish. Anything over like 2, 2.5, 3 is pretty bearish. When you get to 6 to 1, that's pretty bearish. So it tells you that the selling was there. It was confirmed. NASDAQ, not as bad, 4.7, but still a solid number, almost 5 to 1 negative in the NASDAQ. Advanced decline line, same thing. Anytime you get past kind of like the high teens, 1500, 1700, those are bearish reads. Anything over 2000, very bearish read on the NYSE side of thing. These are the advancers versus decliners on the two exchanges, NYSE and NASDAQ. And again, you can see right here, NYSE 1558 and NASDAQ 2538 to the downside. So 2,538 stocks declining more than advancing in terms of on the NASDAQ, which is important. So that was that relatively bearish. And then here, if I turn it down a little bit so we can pop up the sectors, these are the sectors measured from the open, which is the most important thing, only from the open. If it's dark red, it's down more than a half of 1%. And the MO of the market lately has been very clearly to have a lot of sector rotation where even on down days, you still see some smattering of green or sometimes dark green, because dark green means that it's up more than 50 basis from the open. But today didn't really do that. There was a little bit of a haven trade in utilities, as you can see, but how much of a haven was it? They were literally up 17 basis points from the open, so 0.17% from the open. And look how much dark red there is, which again, just a reminder, when the sector is down more than a half of 1% from the open, I give it the dark red color. And look at the amount here. First of all, technology, of course, super important. XLK down almost 2% just from the Friday open. Financials down 1.7. Consumer discretionary 2.5% from the open. Industrials 1.7. Communications 2.8, almost 3% down from the open. Consumer staples down 62. And we know staples have been kind of a haven trade, like right where like the rotation has been happening more into staples, right? Like out of consumer discretionary into staples. And even today, staples were down a bit. Energy was a little bit of a haven, down only just under half of 1%. Utilities we already talked about. Materials were down 2%, and real estate kind of held its own. So the sectors were more confirming today. That's the information that you're going to get out of what I'm showing you. You want to sort of ask yourself the question. I think we talked about this in last week's show. I'm not sure, right? I believe we talked about the three questions, right? Like, what is the market doing? What is the market trying to do? And how good of a job is the market doing in kind of effectuating part number two, right? What it's trying to do. And this market is obviously going down now and doing a pretty good job of it. And these sectors, when we look at not only the sectors, but the entire market internal screen here, that helps us to answer that question number three. You answer that question number three in two ways. One being where you've moved technically in terms of the signposts on the daily chart or weekly, depending on your time frame outlook. What levels have you crossed? So for instance, in the prior segment, I talked a lot about the breach of the balance area low today and saying, okay, now that we've broken here, we could go to here. That's how you know how well a market is doing what it's trying to do, right? Right. Basically, what levels is it crossing? But again, on top of that, you want to overlay this market internal stuff to give you some context on the move. All right. So that being said, let's move over into weighted AD here. This is probably the greatest thing since sliced bread. I've been talking about this forever. We are not big on indicators here at ShadowTrader.net. We only sell a small handful of things, one of which is this weighted AD script for Thinkorswim. We also have it available for a couple other platforms, for NinjaTrader and also for TradingView. You can check this all out on our site at ShadowTrader.net/indicators. You can see that right there in the Chiron on the screen. What I want you to take away from this right now is the fact that First of all, on a trending day down like you had Friday, you should go negative on the weighted AD very quickly, and you should stay negative, and you should go from upper right to lower left, which you did, right? That's point number one. A more choppy day will have the weighted AD trading on both sides of zero. We saw that more like midweek when we had kind of like the Tuesday, Wednesday, Thursday, more choppy market, and you had it on both sides. That's a more difficult market to trade, that, and is not indicative of any real major lasting trend in the market. And if you were watching and trading on those days, you know that there was a lot of back and forth, and that's because that weighted AD was confirming that on either side. You get that from sector rotation, basically. So what the weighted AD is, if you don't know, is that all of those histograms are basically just giving you a pictorial representation, graphical representation, if you will, of what those 11 boxes I just showed you are doing. So you take the percentage move from the open and you create this cumulative number that's adding up every 5 minutes here on the histogram, and that's either plotting above or below zero. And again, it's the cumulative move of all of those 11 sectors, but most importantly, weighted according to their weights in the S&P. So that means that if technology and financials and healthcare are down a lot, that weighted AD is going to be negative, even if sectors like utilities and materials and real estate are up, right? Because those have very little weight. And that's important, especially because if you are doing DT0 or you are day trading ES or NQ for that matter, because NQ tends to follow, this is worth its weight in gold. So you should definitely check out this indicator. I absolutely swear by it, and I think it's fantastic. So bottom line is, takeaway today is, you had the upper left to lower right move in the weighted AD, but just as important, the absolute number was very low. I don't pay too much attention or put too much weight on the absolute number unless it gets down below about minus 450, 500-ish. This one was minus 711 at the close, as you can see right here. So it was a decent clip to the downside. Then we have Iceberg Tick. This is another one that we sell that is, I think, also worth its weight in gold. Absolutely fantastic. And this one is showing you that, and you have minus 1,000 once, minus 1,000 twice, almost three times, close enough. So that's three. There's four. There's five, and there's six. You don't have to get exactly to minus 1,000 to have what I call a minus 1,000 tick. Close enough to me is good enough. And this is confirming to me in that you had this many tests of the minus 1,000 level, the fact that there were six of them, and then the iceberg tick, the way that it really shines is very simply showing you where the amount of time was spent in terms of being above the zero line or below the zero line. And you can see on a trending day like we had here, look at this, all the way till 11:30, almost no positive ticks. And wherever you saw positive ticks, how much time was spent? Very little. It didn't spend a lot of time, but how much time was spent where it filled in the red paint under zero pretty much the whole day. I mean, it was literally like probably 85-15. So this is also something that we have on our site that I think it really shines here and really confirms what's going on. So overall, internals, I feel confirming today and basically confirming the bearish tone on Friday. All right, time now for the sector spotlight. And this week it's going to be healthcare. And let me tell you why. Because it has been somewhat of an outlier, looking more bearish in the market and holding up really well. And I just wanted to point it out for this week in the sector spotlight because it is still, got to look at my screen here, almost 11% of the market, 10.8. So if it breaks down, the reason I'm focusing on healthcare is simply that I think it will be more of a confirmation that the market is going to move lower, because as you can see from the daily chart here, it really hasn't done that much as of now. It's still kind of in this consolidation. And more importantly, this consolidation is a diamond pattern, and diamond patterns are pretty powerful. Diamond pattern basically looks like this because it's kind of shaped like a diamond, right? And it is essentially a pattern that sort of foreshadows a larger move, but you don't know which direction that move can be. Diamond pattern can always break to the upside, could break to the downside, but generally foreshadows a larger move. So if it is to the downside, all I'm pointing out here is that this is a sector that has been showing some relative strength as of late. If it breaks down, it will be a little bit more confirmation for you that the market is indeed going to move markedly lower. All right, charts to watch segment 2 this week. First one is bonds. Not doing too much as of yet. I just wanted to point out that I thought it was somewhat surprising that it had rolled over quite a bit. I was actually long TLT from in here. On this little breakout point, I was long bonds. And I ended up getting out of that break even pretty much somewhere like in here, maybe just for like a tiny little gain as it kind of pulled in quite a bit. And you can see that there was obviously a move here that which was a loss of trend. So I think it was kind of right in here that I was bailing, or maybe the day before. With a tiny gain, nothing really happened. And then the move this week was kind of confirming that. You can see what happened here on Wednesday, Thursday, you moved down. And I thought that was kind of interesting because it, kind of made me feel like, okay, I probably made the right decision. These bonds are not working. Just let this go. And it's probably good to get out of it. But then Friday's action really jumped up, kind of back up in the other direction. And so, again, it's very similar to healthcare. Just kind of watch closely. Is there going to be some sort of a haven trade here where, people, where the relationship that people would expect, that people have expected for a long, that used to work a long time ago is actually going to come into play? Again, why do you want to know these things? Just to see if it is confirming that equities are going to move lower. It's just one data point. And obviously, over the last few years, this has not really been the case, right? We have not seen a sort of stocks up, bonds down type of scenario. They've been moving more in lockstep and in different ways, and it's just not there as much as it used to be. But just something to pay attention to see if those bonds maintain that strength. All right. Beyond that, the other chart I want you to pay attention to, and this could be a trade for many of you, is Bitcoin, as I alluded to in the intro, because this is kind of an interesting breakdown here to me, coming down to about this 84,000 area. And if you look at the trend line here, it has now lost the uptrend here. The downtrend here is basically intact. Look at how technically it's trading. It's really very, very technical, wherein you run up right to the downtrend line, consolidate for a couple of days, then fail. I've been saying for a long time that I don't think Bitcoin is a risk off asset. I think it's a risk on asset, and it seems to trade relatively similarly with the S&P and the Nasdaq. So keep that in mind. Now, what could happen here is if equities break down and Bitcoin breaks down and keeps going lower, I think there's going to be a retest of that low 72,000 probably area. And if you look on a weekly chart, you can see how important that is. It's extremely important because it's really the area right here in the low 70s where you had the breakout. And it's relatively common in Bitcoin to do 100% retracement of a move before continuing higher. So retesting that prior high, I think, would actually be a pretty bullish setup in Bitcoin. And note that it also ties in very well with where trend is going to come in, right? If you connect these right here, you connect that low, well, lo and behold, it's pretty much at the uptrend line right in here, again, in those low to mid 74, 75,000 area. So watch for that. Again, it's kind of going to probably move with the market, but if it gets down to there, I would be interested. This may be an area where I might consider being a buyer if we retest that area of the low 70s. And that is my show for today. Thank you so much for spending a little bit of your weekend with me. So let's recap just a little bit of what we talked about on the technical level. Friday was pretty bearish from a technical analysis perspective in terms of the size of that bar and what signposts it took out. Most importantly, going back down to the low of the balance area from last week and actually moving through the low of the balance area. So on those metrics, it was pretty bearish, but also most importantly on the metrics of the context of market internals, it was also pretty bearish with that 6-to-1 negative breadth, 1500 negative on the AD line, weighted AD down at minus 700, almost all negative ticks on the iceberg tick. So all of that was confirming. So where do we have potential to go next week? S&P 5504 is the March 13th low, and in the NDX it's 19152. All right, so there's potential to go there as well. All right, and then kind of take it from there, because remember, that you've got those uptrend lines in both of those indexes from April 2023. Those uptrend lines are coming in right below those levels. So it's going to be kind of tricky in terms of if you can take out that March 13 low, do you actually go to the trend lines, break there? Do we get a bounce, etc.? All right. If you can, please hit the like and subscribe buttons and the little bell icon to be notified whenever Shadow Trader posts new videos for what it's worth, I didn't do a market profile segment on this particular show, but I just want to leave you with this one chart here that's kind of confirming everything we're talking about. And that is simply the activity very late in the day in the market profile. And you can see it right here. I still use the 415 settlement or close rather as my settlement. It's kind of moved up a bit. I know about 1 to 2 years ago, whatever it was, it's changed a little bit. They trade a little bit longer, but not necessarily on Fridays. And this little red line here, this little box here was 4:15 p.m. Eastern in the ES. And as you can see, as I'm recording these videos, it's closed now, but it already dropped another 10 from there. And I was telling my subscribers late in the day, I said, watch very, very closely. If you don't get the counter trend rally late in the day, which is generally all of the day traders who cannot go out short, having to cover, and usually in the last could be 15 minutes, 10 minutes, could be 5 minutes, could be the last 3 minutes of the day. You get this upward swing. I said, if you don't get that, the market's probably going to move lower and the potential is there for a gap down on Sunday night. That counter trend move on Friday afternoon, if you were watching between about 3:45 and 4, was very, very weak. And as soon as the bell rang, those futures just kept still going lower. And you can see, like I said, we're already down another 10 from there. So probably going to be gapping down on Sunday and maybe even putting those March 13th lows into play faster than we think, maybe even before the market opens on Monday, at least in the futures market. All right. Again, thank you so much for watching. Coming at you from beautiful Los Angeles, California. As always, I wish you good trading and good night.